Hey everyone, and welcome. So what's happening in the crypto market today is a tale of two completely different worlds. On one hand, you've got this intense, short-term fear that's causing a pretty brutal pullback. But on the other hand, if you look just beneath the surface, there's this massive, long-term conviction playing out. It's a real battle. All right, let's just rip the Band-Aid off. This is the number that's flashing bright red everywhere. Bitcoin has plunged, hitting its lowest point in 15 weeks. And a number like that, well, it's enough to spark some serious fear and send ripples through the entire market. And that leads us to the million-dollar question, doesn't it? What exactly is this moment? Is this just a trap designed to wipe out traders who are a little too over-leveraged, or is this one of those rare golden opportunities to buy when everyone else is scared? That's what we're going to break down. Okay, so first up, let's get into the short-term shock. To really get what's going on, we have to understand where all this panic and downward pressure is coming from. What's the immediate trigger? Well, here's a big part of the answer. We saw a really brutal wave of liquidations, a staggering $800 million in long positions. Bets that the price was going to go up were just, poof, completely wiped out. That kind of forced selling just creates this nasty downward spiral. And really, this selling pressure is coming from a sort of one-two punch. On the one hand, you've got the big picture macro stuff, like trade tensions, which are squeezing money out of the system. And on the other hand, we're seeing this really significant and kind of worrying reversal from the big institutional players. And if you need the hard data, here it is. Almost $600 million has been pulled out of spot Bitcoin ETFs in just 24 hours. There's no way to sugarcoat it. For now, Wall Street is selling, and that's a powerful force pushing prices down. But, and this is a huge but, while all the headlines are screaming panic, a completely different story is unfolding behind the scenes. And this, my friends, is where the long-term picture starts to get really, really interesting. So while a lot of people are getting fearful, some of the biggest players in crypto are making billion-dollar moves. You've got the founder of Huobi leading a $1 billion plan for an Ether treasury, and Ripple just announced its own billion-dollar fund for XRP. These aren't small bets, right? These are massive signals of deep, long-term belief. And this chart just illustrates the trend perfectly. I mean, look at that jump. The number of publicly traded companies holding Bitcoin on their balance sheets went from just one, a lonely pioneer, to over 75. It's clear that corporate America is buying into this for the long haul. And it's not just about Bitcoin. What's super fascinating is that some of the key altcoins are showing surprising strength. Ethereum is holding up relatively well, thanks to that treasury news. And then you have XRP and Solana, which are actually rallying because they each have their own powerful, positive stories going on. So, you might be asking, why are they so confident? Well, this long-term conviction, it's not just a hunch. It's being built on some really key tech trends that are quietly reshaping finance. This is the why behind those billion-dollar bets. I mean, case in point, the payment giant Stripe. They've got a new blockchain called Tempo that's all about stablecoins and real-world payments, and it just hit a massive $5 billion valuation. That's a huge signal that big tech sees this technology as the essential plumbing for a whole new economy. And this right here, this is the key takeaway. Major financial players like Fidelity are now looking at stablecoins not as some niche crypto thing, but as the backbone of global money transfer. That's a profound shift in thinking. It's moving from speculation to infrastructure. Okay, so we've got intense short-term fear on one side and this massive long-term building on the other. So what in the world are you supposed to do about it? Let's talk about a clear, level-headed strategy for navigating this kind of volatility. First, let's take the market's temperature. The Fear and Greed Index is sitting at 23, which is deep in extreme fear territory. And historically, as any seasoned investor will tell you, when the market is this fearful, it often means we're getting close to a local bottom. And, there's a fascinating theory from the folks at Fidelity Digital Assets for what this might be. They think this kind of wild volatility could actually be a sign of a bull market's final acceleration phase. Basically, a period of crazy swings right before one last major push higher. So to navigate this, there are two critical things to keep your eyes on. First, that key support level for Bitcoin at $103,000. We really want to see that hold. And second, we need to see those spot ETF flows flip from negative back to positive. That's the signal that institutional selling is running out of steam. So what's the game plan? A disciplined approach is everything right now. First, it's probably wise to reduce leverage. In a market this choppy, getting liquidated is just too easy. Second, focus on quality. Stick to the assets with strong fundamentals and clear backing, the ones the big players are also interested in.
So here we are. The market is truly at a crossroads. It's being torn between the immediate headwinds of fear and ETF outflows, and the powerful, foundational tailwinds of real adoption and billion-dollar investments.
Over the next day or two, the market's direction is probably going to be influenced by a few key things. Keep an eye out for the new ETF flow data, any news on stablecoin regulation, and of course, any new developments on the macro front with US-China trade.
Which leaves us with the biggest question of all. Which force is going to win this tug-of-war in the short term? Is the fear going to push Bitcoin down to that critical $13,000 level? Or will the quiet institutional demand see this as the dip they've been waiting for and start buying it back up? What do you think? Let me know your thoughts in the comments. We'll be watching very closely. Thanks for joining.